Hi everyone, in the previous video we started building our balance sheet based on the journal entries, and we are going to continue building and finishing the balance sheet. So we did the cash, accounts receivable and inventory. Now it's time for prepaid rent. As you recall from the previous videos, there was a prepaid rent we paid at the beginning of the period for $6,000. And then there was some time passed, and as a result we recognized an expense and a reduction in prepaid rent. So as time passes, you use this asset type called prepaid rent, and when you prepay any type of asset type like rent, insurance, etc. So we had some at the beginning and then we used at the end, and this is pretty much it. As you are going to see, these are what's called the current assets that the company can use within a year or so. And now let's take a look at the long-term assets. At the beginning we purchased PP&E, so we are going to look at that portion. We purchased PP&E worth of $6,000. And that's pretty much it. So when you go to the transactions, that's the only PP&E that we are going to record. Accumulated depreciation is going to be recorded as negative because it's going to reduce the amount of net PP&E. So we are going to look at the closing entries, and accumulated depreciation is going to be negative 600. The reason why we show it this way is because this way is going to give us more information. We are going to have PP&E as historical cost and accumulated depreciation. Once you build side by side balance sheet for different time horizons, you are going to see that how accumulated depreciation changes over time. And as I mentioned earlier, we are going to have a deep dive into depreciation itself and how it's calculated in the upcoming videos. Now it's time to have a total of the assets. We are going to keep that, and we are going to compare that to our liability plus equity once we finish this section, and after that they should be able to balance, and hence the name balance sheet. So on the liability side, we are going to continue with accounts payable. Let's take a look at the transactions and see where we had accounts payable. We purchased inventory with accounts payable. That's number one. And then we paid some portion against this accounts payable, so we are going to record that as well. And as a result, we are going to have accounts payable in the amount of $1,000. We have unearned revenue. That's a liability as well. That's when the customers pays us in advance, but we haven't delivered the services or the products. So let's find that. And unearned revenue is right here. We are going to record that as a liability, and once we deliver that product or service that we promised, we are going to reduce that. But for now, that hasn't been anything done, so we are going to keep it as is. In the next video, we are going to continue finishing the liability section, and we are going to start working on total equity, and then we are going to look at the balance sheet overall.